there's a famous fight brewing between President Trump and Federal Reserve Chairman Jerome Powell. And it really boils down to the Federal Reserve has not lowered interest rates as of the time I record this in about 6 or 7 months. And President Trump would like to see the interest rates be quite a bit lower. But the question is, what would happen if President Trump got his wish? President Trump has said he'd like to see rates as low as 1%, which is over 3 percentage points higher than where they're at now. The rate that the Federal Reserve sets, which is between 4.25 and 4.5% as I record this. So what would happen if President Trump got his wish? And Reuters did an article on this, and the title of the article is Why Trump's Push for a 1% Policy Rate Could Spell Trouble for the U.S. Economy. Now, I'm not a political channel, and I'm going to talk about the pros and the cons, but I did think that there's one sentence in this Reuters article that was interesting. President Trump should be careful what he wishes for. So let's talk about that. But before we get there, I want to lay a little bit of groundwork. So first, I want to go quickly to a PBS article. It says, Trump says he's highly unlikely to fire the Fed chair, Jerome Powell. And he actually called Jerome Powell a knucklehead, President Trump did. And it really comes down to that Federal Reserve rate being at 4.25 to 4.5. Trump wants that quite a bit lower. Now let's quickly go to BBC. And BBC says Trump discusses firing the Fed boss, but highly unlikely he will. And that would be very disruptive to the economy for several reasons. We'll talk about it. Last week, the budget director, Russell Vought, called for an investigation into cost overruns on a $2 billion project to renovate Fed buildings in Washington. Trump said earlier that week he thought it was sort of a fireable offense. And given that the Federal Reserve's chair is Jerome Powell, he's saying that it's a fireable offense potentially for Jerome Powell. An analyst at Deutsche Bank said that a recent shift in the focus of attacks by President Trump on Jerome Powell suggested that the administration was building a case against Powell. And here's what they said. Whether or not the president chooses to act on this case is an open question. And it suggests that the risk of this happening has increased. And importantly, Jerome Powell's second term, now he was initially appointed to that job, the Federal Reserve chairmanship, by President Trump in his first term. And his current term, his second term, Powell's second term, ends in May of 2028. So as I record this, we're 10 months away from his term ending without President Trump having to do anything. Okay, with that as a backdrop, now let's go back to Reuters, see what they think is the risk of President Trump getting his wish, if he were to get his wish of dropping things to 1%. And then I'll share my thoughts. Again, the Reuters article is why Trump's push for a 1% Fed policy rate could spell trouble for the U.S. economy. The super low interest rate that President Trump seeks could easily backfire if investors in the $36 trillion Treasury market saw such a move as meaning the Fed had caved to political pressures and cut rates for the wrong reason. And the fear here is that the Federal Reserve has a dual mandate. One is to keep inflation under control. The other is to keep the nation in as full employment of a situation as possible, keep unemployment low. And the risk is if investors feel like the Federal Reserve is not going to keep inflation in check, then things could actually backfire. Interest rates could actually go up for longer dated treasuries with which the government sells to fund our budget deficit. Okay, let's keep going with Reuters. They asked the question, is 1% normal? And I thought the answer to this was going to be no. 1% is not normal. But here's what they say. A 1% policy rate has not been uncommon in the last quarter of a century, but it's no sign of good times, and it coincides with the joblessness of 6% or higher. Right now, we're hovering about 4 to 4.5% on the unemployment. Um, and they have this chart here that I want to go through with you that shows that yes, we have been at 1%, and each of the last 3 or 4 presidents have seen 1% rates in their tenure, but it typically coincides with a recession. Um, Going back to the Reuters article, they share the bond market fear would be that inflation would reignite if interest rates went down. And essentially, we would have a loss of independence and a de-anchoring of inflation, says Gregory Dacko, the chief economist at EY Parthenian. Okay, which agrees with my point of view, which is it could actually backfire. So we have seen 1% rates before. We also saw 1% rates when employment was low after the pandemic, after the initial shock of the pandemic. um, we saw, companies were offering signing bonuses for retail jobs that we hadn't seen before and we haven't seen since. There was a huge shortage of employees at a time when um, the economy was doing well because we had all this stimulus money because of COVID, and at a time when unemployment was low. So we have seen all of that, and at the time, this was before inflation reared its head. At the time, we were kind of in what I call the Goldilocks economy. We had inflation under control, we had the economy growing, we had unemployment low, and for the first time in a long time, we saw hourly workers actually making up ground and increasing their wages, which, the pendulum swings from one side to the other. This isn't a political channel, but I do think it's good for hourly workers, for blue collar workers, for really for all of us to have our wages keep up with inflation. And unfortunately, there's been periods of times where that hasn't happened, and there's also been long periods of time where we've barely scraped by, and maybe kept up with inflation, but just a tad more. And it'd be nice as productivity increases, as we're all doing more, working better, faster, cheaper, than we ever had to make companies at an all-time profitability. It's nice to see the workers also get our share of that. And so what would happen if President Trump got his wish of 1%? It depends. It could spark inflation for several reasons. The economy could overheat. And even if the economy doesn't overheat, investors could be worried that the Federal Reserve is no longer an independent organization who is going to look at the data, look at the facts wherever they lie, and make the decision that they feel is best for their dual mandate, which is relatively low unemployment and keeping inflation under check. Now, we all have biases. For anybody to say that Federal Chair Jerome Powell does not have any biases would be foolish. We all have biases that we bring in, and there's lots of times that the theory says something bad should happen, and it doesn't happen. So what do we do? I think what we do is we plan, and we have what-if scenarios in our financial plans, whether that's a retirement plan or if you're 20, 30, 40 years away from retirement. We have scenario planning, and that's why I really suggest all of us have a financial plan, and don't use Google Sheets, don't use Excel. Too easy to make a mistake. Use software that's designed for you. The software that I like happens to be really, really good at scenario planning, where you can play out different rates. What happens if inflation rises? What happens if it doesn't? What happens if the economy and the stock market has a good period? What happens if it ends up being your pessimistic case? And Bolden can help you do that. You can find Bolden at this QR code or in the link in the description. I am an affiliate, so if you use that link, you'll be supporting the channel. And if you like this video, I think the next video of mine that you'd like is this video here, 8 things to stop doing in our 50s and 60s in order to enjoy our journey to retirement more. Thanks for watching this video. Bye-bye.